Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Tuesday, October 13th, 2020. Here are our top stories. PPP scammers make fintechs their lenders of choice, and ensuring equal access to finance. Well, joining me now to discuss this and more is Dan Klein. He's lead advisor and executive producer with 7 Investing. Dan, thanks so much for joining us this morning.
Thanks for having me, Jeff. We taped our first live show yesterday, and while the end product is pretty good, if it could have gone wrong, it did go wrong.
Look, that happens. And, anytime you do something live, there's the challenge that goes with that. And also, you're just going to have the unexpected. You just got to roll with the changes, as we say on the show. So Dan, let's talk about this. PPP loans were designed for businesses and businesses to maintain their staffs, keep their doors open. And many fintechs got involved. And we've talked about this on the show, but it seems like there have been some bad actors here who have gotten PPP loans through these fintechs. I want to get your thoughts on this.
Yeah, so it's important to remember that the bad actors weren't on the fintech side. They were on the small business. And I put that in quotes because some of these are fraudulent businesses. This system, it's the same with the $1,200 checks that went out to individuals. The system was built for speed. It was built to get the money out there as fast as possible. Now, that's great. If you own a small business and your business went away or was legally had to be closed, let's say you own like a spa or a hair salon and it had to close due to the pandemic, you were able to get loans to be able to pay your employees, maybe help with your rent, do the things that you would need to do to get through the pandemic. That was great. But this was structured to move very quickly. Now, you've gotten a loan before. When you get a mortgage, you have to send them all sorts of stuff, your taxes for 2 years, just an inordinate amount of data. That being said, this didn't require that. Basically, if they had Googled some of these businesses, they would have known, hey, this might not still be in business. This might be someone appropriating someone else's former business. So this was a case of the government engineered it this way. It wasn't that they wanted fraud, but a decision was made here that doing it quickly was more important than doing it correctly. And that might be right. That might have saved jobs. I don't think we know the answer here. So there was inevitably going to be some fraud here. And there's a lot that we could learn from this in terms of how we're registering businesses. Like, I business, as do you, and I'm registered with the state of Florida and had to do some things to deal with that. So I'm not entirely sure why we didn't have better standards beforehand where, oh, hey, look, you didn't pay taxes as a business, maybe you're not a business. But that being said, the system worked for the PPP loans kind of as it was supposed to, and some people exploited that.
Yeah, and this is not to say, Dan, that there won't be prosecutions, the request of giving money back. And we've seen financial advisory firms is something we covered, not necessarily in your segment, within another segment, that actually took money and gave money back after receiving it. And I agree with you. I think that the whole point here was to do things expeditiously. If we're going to shut down our economy, which is essentially what happened, we've got to find a way to get money into the hands of businesses and people. I guess my concern is that maybe the money didn't necessarily find its way to the right small businesses, meaning 100,000 by some count permanently. But I would expect, Dan, that there would be prosecutions both at the state, or maybe not at the state, but at the federal level regarding some of this.
Yeah, absolutely. And there's going to be some people that didn't intend to get money incorrectly that are going to give money back. We've seen it. Some of it is just optics. Like Ruth's Chris got, I forget the amount, but tens of millions of dollars. Mm-hmm. Now, it didn't look good because this was a publicly traded company with access to capital, but how many waiters, how many cooks, how many people would they have paid? There were very strict rules with how this money could be used. And I'm not entirely sure as a society why we were okay with airlines getting tens of billions of dollars and not okay with small restaurant chains getting tens of millions of dollars. Like there's been a very strange way we're dealing with this as a society. And look, if money is being used to keep people in their jobs, I'm okay with that no matter what kind of business it is.
Yeah, but I think the purpose, at least as it was originally defined, was for smaller retailers, people who have maybe 1 to 20 employees to keep them open. By and large, it's you can't money a quarterback either. It's really hard to do that. But looking back on the early days of this, you're right. It was done to be expeditious. We were trying to figure out the rules, going through like a Chase or a Bank of America. They were trying to figure out the rules. How do you audit these things? What documents do you need? But I think there's a lot to learn here. Dan, in terms of the fintechs, and we've talked about this before, the Cabbages of the world and other fintechs, they really stepped up here, Dan, to get whatever the apparatus established was set up and a process put in place. And we talked last week about embedded finance and the velocity by which finance is being transacted. In my mind, this is a thing in terms of these fintechs stepping up.
Yeah, absolutely. So I use a payroll company, and every time I log in to pay myself, it was asking me, do you need to apply for a PPP loan? And that was much better than the bank I use, which is Capital One, which I'm sure they did it, but they didn't make any particular effort to let me know how it would happen. Now, I'm lucky. I'm just me. My employment improved during the pandemic. It didn't get worse. So this wasn't something I needed to do. But I'm sure a lot of people use the payroll company I use, and they went, oh, wow, what is this? It's available to me. How can I process it? And that, in general, about 75% of these went through fintech companies because they were more set up to handle it. They could pivot faster than a big bank. And I think we've learned some lessons about where we do our banking, because I know some small business owners, but by the time they were able to get through the paperwork for their bank, the money was gone. So this is a case where being fast mattered, and fintech is set up to do that way better than in large parts the traditional banking system.
And that's why you're seeing banks acquire fintechs. I think we've talked about that several weeks ago, where banks actually go out and they're just not agile. They've got a core business that they've been focused on, but they recognize, and there actually is kind of a give and take here where, banks are trying to pivot, trying to be more digitally focused for their customers, provide information. They can't do it necessarily as well as some fintechs, and they're going out and either partnering or buying.
Yeah, absolutely. And that's always dicey. We've seen the history of when an old world company buys a new world company, that doesn't always go well. I'll give the example. This has gone well, but Walmart integrating with Jet.com. They basically bought Jet.com in order to get Mark Lowry and their tech team. And that was a fight. Like, the CEO of Walmart basically empowered the digital guys and said, we have to change everything. And the retail guys who are running a very successful business said, hey, wait a minute, we're going to lose money to do all of these things, to deliver faster, to ship from stores. And in the long run, those are the right choices. But in the short term, they're not. So when a bank buys some 20-person fintech startup that does some amazing thing, there's no given that the bank is going to be able to implement that technology. History shows that doesn't work. I worked for a very innovative digital startup in the late 90s, a men's lifestyle website that was bought by a very old world traditional magazine. And they did a really bad job integrating us. So, and it didn't work. And they didn't entirely go out of business, but they failed pretty badly. The product I worked on, which was successful, no longer existed. And I'm being careful to not use the names because the URLs for that are no longer going to the places they used to went, and I don't want to send anybody to where they go now. But that being said, this should work. You should see partnerships, you should see acquisitions. But if you're a bank and you buy a fintech company, you have to aggressively work to protect that legacy, to make sure you're integrating what it needs to do. And that means almost certainly sacrificing money in the short term in order to make changes for the long term. And that can be difficult to do in this managed to the quarter culture, which banks are very guilty of.
Yeah, well, digital payments seem to be the future. So I think the fintechs are headed in the right direction. I think the banks are headed in the right direction. Hopefully there's some intersection, Dan. Well, we're going to take a quick break. When we come back, we're going to talk about fintech and how it can level the playing field for many of those who are looking to establish bank accounts and are looking to establish ease of use for making payments. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as one day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Dan Klein. He's lead advisor and executive producer for 7 Investing. Dan, thanks so much for staying with us this morning.
Jeff, thanks for keeping me.
Absolutely. So great first segment talking about some of the challenges with PPP loans and some lessons there. Let's talk about how fintech has actually leveled the playing field when it comes to accessing money, accessing capital, and giving those who maybe are a little bit less fortunate opportunity.
Yeah, so Jeff, the vast majority of Americans have a smartphone. Not all of the people who have a smartphone live in an area where it's easy to get to a bank. Now, you and I, well, you lived in New York for a long time, so maybe you didn't have a car. But in New York, there's all sorts of public transportation. It's easy to get pretty much anywhere. And probably you can walk to a bank from any neighborhood. I live in West Palm Beach, which is a sprawling city. It's gigantic in terms of, it could take 25 minutes to half an hour to get from one side of the city to the other. Now, I live downtown. There are a couple of banks downtown. But there are places you could live where you don't live walking distance to a bank. You'd have to get in a bus to go to a bank, and that's not easy. But if you have a bank on your smartphone, if you have the ability through your smartphone provider, say T-Mobile, to actually get a bank account, well, that democratizes the ability to have a bank account. That takes you away from using, the things that tend to set up shop in poorer neighborhoods, like payday lenders and check cashing places. The ability to bank on your phone is a game changer. And I know, even though there is a bank 3/4 of a mile from my house, it is closer to get to the bank than it is to get to a Starbucks or to get to my office, that I deposit checks on my phone. I never physically go to a bank unless I need like a very specific service, like say a notary or something like that. So the advance of fintech technology in really easy to use ways, we've all used, not all of us, but a lot of us have used Venmo or Cash App or Zelle or Apple Pay, these are things that are available to pretty much anyone, and they're not difficult to set up. So it just makes services that you and I are pretty privileged. We don't think about it being difficult to get a bank account. But if you don't have certain things, it can be difficult to get to a bank account. And if you can't physically get to the bank easily, it becomes just a chore. And it's, well, do I go half an hour round trip on the bus to get to the bank, or do I just go to this check cashing place that's going to take 7% or whatever the number is? So this is really encouraging. And obviously, in the US, it's encouraging. Globally, it's game changing, because while we might have a small percentage of our society that's unbanked, in certain countries in the world, it's the majority of people don't have access to these services. So this absolutely changes everything.
And Dan, we have talked about payday lending loans in the past and how you just keep getting deeper and deeper and deeper in debt. Probably not the best thing, even though companies like Square and others are trying to lower the fees there. But there are a set of banks that have been created that are not even brick and mortar banks. They're just online banks, and they're FDIC insured, which means guaranteed by the federal government up to a certain amount. That's a big change as well. So to your point, you could not even ever have to go to a bank, with the exception of maybe going to an ATM, and maybe you can use any ATM, but you could establish a bank account, have your proceeds or some amount of savings put into this bank through your phone, and boom, you're building wealth, you're building savings, you're having that $500 emergency savings that looks like we all need in light of what happened with the pandemic.
Yeah, absolutely. And I'll refer to my former employer. But if you go to The Ascent, that is TheAscent.com, that's probably full sister, they'll you the best virtual banks where you can get the highest interest. Now, interest rates are incredibly low, so that's not the reason you're going to go to a virtual bank, but there's a convenience to it. Jeff, I'm a Capital One customer. That's my business banking account, and it's a Sparks business account. Now, I had no idea that is a purely virtual account, to the point that if I go into a Capital One, they won't help me. So it is entirely a digital account. I do all my deposits, everything's online. Now, is it frustrating to be a member of a bank that has physical branches, and when I was in the branch, they weren't willing to help me? Yeah, that's bad customer service. That's not a great idea. But in general, if you join one of these digital-only banks, you can do everything on your phone or a computer. If you have neither of those, maybe not now during a pandemic, but normally, you could do it at the library. You can do it on a public terminal, as long as you're very careful with your passwords. Make sure you delete everything after you get off. So people who previously had no access now can have access. And Jeff, we've talked about things like payday loans, but one of the ways to avoid a payday loan is to have a credit card. And I don't mean a credit card that you're going to charge up long-term debt on. I mean, it's the 29th. I have to buy this. I need food. I get paid on the 30th. Well, I'm going to put it on my credit card. I'm going to get paid. I'm then going to pay that bill before it's due.
Right.
Well, if you don't have a bank account, you can't get a credit card. So if you can get a small credit card that just helps you with those little things, or, that unexpected, oh my God, I'm sick, I need to go to the doctor, there's a $75 copay and I have to go get this medicine, that's another $50. Well, if you don't have the money to do that, you're going to end up not staying sick, missing work, losing more money. So just the simple ability to get a credit card with a small limit that can sort of be your own personal bridge loan, as long as you're very diligent about paying it back, that can be a huge deal for a ton of people. So I'm really excited. Look, I think as people who have had every advantage, we need to make sure that people who don't understand this technology get access to it, that people who don't understand how interest rates work and borrowing. Like, I saw a commercial last night for one of those rental places where you rent a couch or a TV, which is the worst deal imaginable. Now, if that person goes on Amazon, gets an Amazon credit card, and they need the TV, their only TV has broken, they need to buy a TV. Well, they have an Amazon credit card, they could finance that for 0% interest over 12 or 18 months, pay it off in time. Now, I'm not saying you should borrow money to buy a TV, but let's say it's something essential. Your refrigerator breaks, your laptop breaks, you need these things. There are ways that are becoming more accessible to people to borrow money at 0% interest, rather than go into a rental store and pay 8 billion% interest. Your $400 TV ends up costing you $780. It's a terrible idea. So I love seeing technology fix some of this.
Yeah, and it just sounds to me like this is an educational moment. Well, Dan, we're going to have to leave it there. Thanks so much for joining us on the program. Have a great rest of the week, and we'll talk to you again very soon.
I'll see you next week.
Thanks, Dan. Great to see you, and thanks for sharing your perspective. And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Then drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.